house prices are up 60, 70, 80% from just 2-3 years ago. So giving back 10 or 15% doesn't seem like that big of a drop, does it?
I agree 100%. I do think we could see a further softening in prices. But I think in terms of units produced by the home builders, if we're looking at it as an investment standpoint, if we're looking at it as a real estate investor saying, should we buy houses now, existing houses, et cetera, or should we wait for the market to cool a little bit? I don't have a great answer for that. That's not my knitting. What I look at is overshoots in terms of publicly traded securities. And if you look at the S&P 500 down about 11% year to date, the whole home builder index is down double that. To give you an idea, new entry-level housing supply averaged about 150,000 units per year from 2000 to 2010. In the 2010s, it dropped to 65,000 a year, and in 2020, it dropped to 55,000. So there is a structural undersupply, and we have more demand coming online with 72 million millennials, average age 31, 32, and the average starter home purchase age now is all the way up to 33. So this is going to be structural demand for the next 5 years. And I do think we're closer to the end of the tightening cycle than we are to the beginning. So as housing prices cool a little bit and rates stabilize a little bit, historically speaking, in the 70s, rates were 12%. In the 80s, they were 8 or 9%. They're still historically low. We just need to get that footprint, the size of the new supply, to a more normalized level. They can't afford these 3,000 and 4,000 square foot houses that were built for the baby boomers who are aging in place, but they will be able to afford the $300,000 and $350,000 starting homes, even at a 5 or 5.5% 30-year fix.